Hi Liam, how are you?
Hi Olga, how you doing today?
I'm good, thank you. Thank you so much for coming along today. Did you want to sort of start with your background and who O'Brien Palmer is and how you guys fit into the world?
Yeah, absolutely. So my name's Liam Bailey. I'm a registered liquidator and trustee in bankruptcy, and I'm the managing partner at O'Brien Palmer or OBP. 20 years odd experience in insolvency management and administration, and we're talking to lots of people about different types of debt solutions all the time.
We thought we might dive into a topic that we hear all the time, and I'm sure you hear all the time, the acronym DPNs. And it's such a big issue for so many people at the moment.
It is. There's almost every inquiry that comes across my desk at the moment has a director penalty notice related issue, and people want to understand how the solvency issues are going to be affected by the way the ATO issues and enforces director penalty notices and make sure that the solutions are comprehensive. So it's a fantastic topic that everyone's very interested in.
Yeah, absolutely. And I always talk about solutions. So I know that there's a big scary world out there. I know sometimes when people talk about insolvency and liquidators and tax debt, it makes their stomach churn. I had someone in tears just yesterday on the phone after a call from the ATO. But if we can talk about solutions, and a director penalty notice isn't the end of the world. There are so many different ways that it can be dealt with. And I think it's fantastic you and I having this conversation today because I also talk a lot about there's no cookie cutter solution. There is a different outcome and a different solution for every client depending on their circumstances. So I think it would be great to go through today how they differ, what the different circumstances are, and what those different solutions might be. A lot of wording around director penalty notices comes back to people talking about, is it a lockdown director penalty notice or a non-lockdown? And what is a director penalty notice? Did you want to take us sort of right back to basics on what they are, what they mean, how they work?
Yeah, absolutely. Because I think the apprehension around this is that there's so much misinformation out there that if we can
Yeah.
start at some of the basics and then look at how we can solve them as a solutions-based approach, I think that's the information that people are craving. So, look, director penalty notices are a mechanism by which the ATO issues a notice that potentially makes a director personally liable for the debts of their companies, particularly in relation to GST, pay-as-you-go withholding tax, and now superannuation guarantee. Now, the ATO can issue these notices where there's been an accruing liability. It's a way to force directors' focus on bringing them to the table in a discussion about how to solve a growing indebtedness. And they issue these notices that say that you've got 21 days to come to some sort of solution to the problem. Otherwise, we're going to add this liability to your personal tax account. Now, those solutions typically are to pay the debt, to enter into some sort of payment arrangement, or enter into a formal insolvency appointment. There is a second type of director penalty notice that's called the lockdown director penalty notice. Now, in a lockdown director penalty notice, you are automatically liable for the debts of the company incurred because the company has failed to report the debt to the tax office in the ordinary fashion for more than 3 months past the due date for that reporting. And once that time has expired, technically a director is personally liable under the director penalty notice legislation automatically, even if they haven't yet received the notice.
And I think that's a big thing that people don't understand. They're like, oh well, I'm not personally liable until I get the notice. But I think that point is super important. They are liable regardless. And I think the amount of director penalty notices we're seeing is showing the shift in the ATO's attitude around collection and around compliance.
Absolutely. Look, the original idea being from director penalty notice was to force people to prevent the liabilities crystallising by appointing a liquidator or an administrator, or I guess these days a small business restructuring practitioner. But the reality is that once that time limit's passed, they can issue these lockdown director penalty notices notifying you of the liability even after you've already made a formal insolvency appointment. So it's important that you know your position and know your liabilities, and make sure that any solutions that we're looking at comprehensively take into account liabilities that you may already have that you're not actually yet aware of or haven't received notices for.
We see a lot of clients that have both a personal liability component as well as the company. And a lot of directors are unaware that they do have, that it's not just the company. They think that the company has the debt, and that if the company closed down, then their personal liability would go away. One of the solutions that you talked about that we specifically help with is a payment plan. So when the company enters into a payment plan, the other interesting thing about a director penalty notice is their parallel liabilities. So the company, I'm going to use round numbers, the company might have a $300,000 debt that turns into a DPN debt. So both the director and the company on their ATO portals and on their accounts have the same $300,000 debt. So if the company enters into a payment plan and starts to pay off that $300,000 and the debt reduces, then it automatically reduces on the director's account as well. So by putting the company into a payment plan, it stops any actual enforcement of the director penalty notice, and it just sort of sits a bit dormant. What's another solution when you're looking at the insolvency side of things if a company's not viable? So if a company's not viable, there's not enough money coming in to cover these debts, and they don't really see a future down the track. What's one of the solutions that you can help with in that regard?
You look, one of the hardest parts of being an insolvency practitioner is speaking to people who have started businesses that they're very passionate about.
Yeah.
But the unfortunate reality is the business isn't viable. And while you're continuing to trade, you're continuing to expose yourself personally to significant liabilities. So one of the conversations that we have to have about people is, if you're going to enter into some sort of workout arrangement through a formal insolvency appointment, a small business restructure or an administration, is this really a business that's worth saving? Or is it something that's just going to expose you to further liabilities, further risk, that possibly it's time to call it a day on the business and start looking at ways to limit your exposures? And that is hard. People have invested themselves in their businesses, and I feel for them. But that's the real situation. Is that where you're going to put your time and energy every day? Is that how you want to make a living to support your family? Or is there a better place that you can be doing that if you take a more objective view of things? Because the risks of getting it wrong can be quite severe.
And I think that's the biggest difference. So where we come in is if it's a viable business, a payment plan, they just need breathing space and time. And where you come in is when it's no longer viable. Breathing space is not going to fix the problem. Another thing that we get asked all the time is, can you just make the debt go away? Can you just do a deal? Just tell the ATO that if they don't take my $100, then there's no money at all, and everyone's going to lose their business, and just do a deal.
Have you got a magic wand there, Olga? Because
I do,
we could make a
actually.
lot of money.
I've got a magic one right here, because I get asked that all the time. So I did get given a Harry Potter magic wand for Christmas last year to keep on my desk. But unfortunately, it doesn't actually get rid of the core debt. The ATO don't have any legislative power. There's no laws that allow them to get rid of that primary debt without an event of insolvency. But if there is a small business restructure or a VA, you have a slight magic wand, and you can get rid of some of that debt depending on which way the company goes.
Absolutely. Look, small business restructures have become a really viable part of debt management for Australian businesses in the post-COVID environment, largely because the ATO extended an olive branch to the community and said this is an opportunity for everybody to get their tax debts under control and attempt to collect the now close to $100 billion of unpaid taxes, and try and get people's tax accounts back into the black, back to balance, so that they become responsible and on-time taxpayers. Now, if you can come to the tax office with a proposal that is in the best interests of creditors, that is a responsible way forward for your business to get some tax relief, whilst providing a return to the creditors, particularly the tax office. The tax office is interested, they are listening, and they will consider compromise arrangements through the small business restructuring process or through the administration process, and they are supporting that. It has become a bit tougher in recent times because the ATO has taken the view that they need to make sure that we are responsible taxpayers, that people aren't specifically incurring debts that they don't intend to pay, that they're not incentivizing people to create tax avoidance schemes. But that doesn't mean that they're not reasonably listening to businesses that are viable, that have thought about a responsible way forward, and giving them some tax relief through the small business restructuring process.
So we're seeing a big shift in exactly that with the ATO at the moment. Around a lot of work is coming to us from SBRs that have been put forward that have failed. One of the biggest things we're seeing is if there's a director loan or a Div 7A loan, the ATO won't grant the SBRs. And then if we go back to what we were talking about at the beginning with director penalty notices or director's personal liability, I think it's super important, which as you know and you do, when looking at an SBR and whether it's viable, is what the director's personal liability is. And if the personal liability is almost the same because of late lodgements, then often we will come in for a payment arrangement because a SBR is not really going to reduce the debt.
Look, that's really important, and I think that there's been a lot of sales and a lot of pitch to the community out there that's about signing jobs, not about affecting solutions, that have now resulted in people who thought they'd solved their problems by signing up to small business restructures, then finding that they still had a continuing problem with their personal liability. So for explanation, and sorry if I take it back to basics for the people who have asked the questions of me, if you have a $500,000 tax debt, the small business restructure might be successful in obtaining debt relief for the company. For example, you might be able to get a deal approved by the ATO where 25 cents in the dollar is paid on that. But that only resolves the company's liability. And if the director had $300,000 of lockdown DPN liability in the background, there's going to be a potential reduction in that liability by the payment of the SBR debt. But the debt is still going to exist, and you're still in your personal capacity, and you're still going to have to find a way to sort out that parallel liability, I think you called it, which I think is a great term, with the ATO. So we need to make sure that if we are going through a formal insolvency appointment, that it is going to be one that's going to work, that's going to be able to be afforded in light of the obligations that you are going to have under director penalty notices, and make sure that we're implementing them in such a way as to deal with both potential liabilities in the most effective manner possible.
And that's where we do work closely with a number of different service providers. So I truly believe in specialists in today's day and age, and I can understand how difficult it is for people running a business because there are so many intricacies. And so often we'll work with insolvency practitioners like yourself, where you might be looking after the company, and what we're doing is looking after the individual and putting the individual into a payment plan. Once either the company or the individual is in a payment plan, the ATO don't take further recovery action. So one of the questions we get asked is, if I've got a DPN, is it too late? And the simple answer is no. It is not too late for a payment plan. It's not too late to talk to an insolvency practitioner about what those options are if your 21 days haven't expired.
So at OBP, we're very committed to making sure it's the right solution that's affected. And there have been people that have come in and said, look, I've got $500,000 of tax debt. And on examination, we've discovered that actually probably most of that is all going to be locked down for director penalty notices for them because they've had such poor compliance history for a period of time for whatever reason. Now, putting them through a small business restructure might rehabilitate the company, but they're still going to have that debt on their personal account. And so they could end up having to pay that debt really sort of twice, or, and so maybe the restructure isn't the right solution in this particular case. And these are the sorts of people that we would say it's best for them to speak to the specialists like yourself about a way to deal with the concurrent liabilities when they match up. A restructuring practitioner like myself can help you rehabilitate a company where we are just focusing on the company's debts.
Yeah. Another big issue, again, when we go back to the magic wand, is any other ways that the debt can be reduced. And one of the ways it can be reduced, and an example of where we've helped, is by getting rid of the interest and penalties. So those interest and penalties add up very, very quickly. And often if there's a huge amount of personal liability and say an SBR is not going to work, there's still a significant amount of interest and penalties that once a client's in a payment plan, we can look at getting rid of that. Another example that we had was a client that came to us that had 900,000 of debt, so just under the SBR threshold. They tried to do an SBR. They'd offered a 300,000 upfront payment, but the SBR got knocked back. So they came to us, and what we were able to do with that one is put them into a 3-year arrangement with no upfronts. So again, that was viable. They did have cash to keep going, but the SBR solution in that particular instance didn't necessarily work for that client.
And so we get lots of inquiries about, does the ATO treat primary debt and interest and penalties different? And if there is a way to get penalties and interests waived or remitted, what are the sorts of criteria, what are the sorts of things that you like to be able to present to the ATO as an ideal case when you're asking for remission of penalties or interest?
So the ATO don't treat them differently. So sometimes people say to us, well, I only owe half of that debt. The ATO see the full amount to be due and payable. They don't differentiate the two. And when you're doing a payment plan, you actually need to be able to pay the whole debt, because the ATO's stance is the interest is due and payable and part of the debt, unless you can show exceptional circumstances that were outside of your control. So there's legal practice requirements that are laws and the rules of what the ATO will take into consideration that are the circumstances outside of your control. A fun fact at the moment, so natural disasters is one, but at the moment, COVID is no longer enough. So for certain states, I know that's a really rough, terrible thing to hear, but COVID alone is no longer enough as to why you're carrying old debt. And the ATO want to see compliance. So now they are looking at whether you're in a payment plan, whether you're paying your ongoing liabilities rather than incurring exactly what you were saying, further debt. And you don't have to wait till the end of a payment plan to get rid of the interest and penalties, but you need to show that compliance piece and have the facts and situations and scenarios that match every period of the debt. So if that debt's been for 5 years and you were sick for one, then that will match up for that 1 year, but it won't be enough for the whole debt to show why you should have that interest and penalties remitted.
It is really interesting that so many people think that there is a major differentiation between the interest on the debt and the debt itself. I wish I could walk into the bank and explain to them that I only need to pay the amount of my house and not the interest component of that as well. That'd be a wonderful argument to have. You'll do fine for that, won't you? No problem. But it is a misconception out there. I think because there's so many people that seem to be selling wonderful solutions to desperate people, telling them what they want to hear, that they've created this apprehension or this idea that the ATO isn't interested in collecting the interest components as much as they are principal debt, and it's just not the case.
A perfect example of that is we had a client come to us actually through an accountant, and they'd paid all the principal debt and there was 100,000 left that was interest only. The accountant had done an application saying it was their fault, that they'd made a mistake to get the interest back. and the ATO issued a Garnishee notice. So that Garnishee notice was for $70,000. It disappeared out of the client's bank account, and that was an interest-only debt. So there is still recovery action happening in relation to interest-only payments.
And look, it's not something that we need to talk about today, but if anyone's looking for a further indication of how serious the ATO is about collecting general interest charges, the changes in the recent legislation that mean that interest is no longer a deductible cost of the business would show that the ATO is no longer interested in interest-free funding businesses moving forward, and they're taking collection of these debts very seriously.
And I think that goes hand in hand with the amount of directed penalty notices we're seeing as well. So it's a shift in attitude, it's a shift in perception. The ATO do not want to be seen as a cheap or easy small business bank. I think there was that perception for a while, and these changes in the laws and changes in recovery action absolutely are showing that shift. If someone says that they've got a directed penalty notice and it's 5 days in, is that too late for you? What is your sort of response in that situation? Because sometimes by the time snail mail gets to you or a director receives the notice, I hear people say, oh, well, it's too late now. There's only 10 days left. What would you say to that?
I think 10 days means that you've still got 9 days left in which to come up with a solution and work on it. It's never too late, and I don't think that people should throw up their hands or despair. There are people available to speak to. You spoke before about the benefit of expertise and specialists, and people like yourself who deal with directed penalty notices all the time are available to talk to. I like to think that we're not particularly scary. We're fairly approachable.
We try to be approachable.
So, but look, I've had people that have come in and they said, look, we've just got back from holidays or leave. I found this in the mail. Technically, it would seem like it expires tomorrow. What can we do? And we have, within 24 hours, implemented and formalised an appointment of a small business restructure that was sufficient to prevent the debt crystallising on them. So it isn't too late. I wouldn't encourage people to rely upon arguments about when they receive the directed penalty notices, because that's all very settled law now. The date that it's issued out, the date on the notice is the date. And you can waste a lot of time and money arguing about that. That's not going to be a successful way of responding. You're far better focused on fixing the substantive issues the notice requires or draws your attention to than trying to fight it on technicalities.
I often talk about, and my frogs go a little bit viral, about eating the frog. And it is scary, but you've got to do the thing you don't want to do. And I think the biggest tip, if anyone could take a tip away from today, is pick up the phone to look at the solutions. A payment plan will stop further action. There's insolvency solutions. But if you ignore it because it is a bit scary and you don't do anything, it will get worse. But DPNs are not the end of the world by any means. They do make you personally liable. You do have to take them very seriously, but you need to eat that frog and pick up the phone and find someone to help you.
Yeah, look, I always think back to the point of when the legislation was introduced, directed penalty notices first and foremost were designed to force people's attention to a growing solvency issue. They're not issued blindly, they're not issued for no reason. This isn't just a cheap cash grab by the government. They were originally designed to draw your attention to the fact that you've got a growing tax debt and therefore probably a growing solvency issue, one that needs to be confronted head on and really sharpen your focus in that. When they introduced lockdown DPNs, that was also about motivating people to stay on top of their reporting obligations. You know, if you have proper accounting systems in place, if you're reporting on a regular basis, you're going to know your solvency position and you're going to be better equipped to deal with issues that arise. So whilst this legislation and where people interact with it becomes a liability and a risk, it was intended to focus people's attention on potential solvency issues and, as you say, to eat the frog and confront the problem.
It's funny the amount of people that say to me, "Oh no, I'm not going to lodge. If I don't lodge, the ATO won't know that I've got debt." They know. It is actually worse to not lodge for exactly what we're talking about.
It's such
so
an
a lot
old
of people
school approach. It may have been true at one point in time, but it's been a decade now since lockdown DPNs have become the reality of dealing with your tax situations. The tax office has so many ways to find out what you owe, and even if they don't, they will issue you with estimates, and they will issue direct appellee notices based on estimates because of your failure to lodge and provide the required information. So just burying your head in the sand isn't an effective way at all of dealing with the problem. It's a major risk and a major exposure.
Yeah. If you had one tip, if someone is watching this, I always say if someone's watching this at midnight, super stressed and not really knowing, what would be your one tip for taking away on how we can help?
Oh, look, expertise realistically is you don't know what you don't know. Pick up the phone and speak to people who are qualified experts. Members of proper industry bodies like the Australian Restructuring Insolvency Turnaround Association. There are so many people out there that are selling a product.
Yeah.
But then there are people who are professionals, members of accredited organisations, who are licensed by the Australian Securities and Investments Commission or ATO, in my case, as a trustee in bankruptcy and a liquidator. These are the people to obtain proper advice from. And we are always available to have a chat with. We don't want your money or your time to have a conversation about your circumstances, your options as we see them, so that we can help give you some guidance about where to go next and to speak to the right people. So don't be afraid to pick up the phone. There are people who are here to talk to you and help you out.
Yeah, absolutely. Thank you so much for chatting today, Liam.
Thanks very much for your time, Olga. I really appreciate it.
Thank you.
Bye.